What I'm thinking of doing today is to sell a cover call against my main position. Now, I'm carrying those shares at about 15 bucks with 80 cents, and I am profiting about 827 bucks. Those are unrealized gain, which translates in a percentage gain of nearly 7%. Now, Maine is a high dividend paying stock, which pays, let me see here on Seeking Alpha, the dividends. Right here, they pay a little bit over 6.7% yearly dividend. The good thing is that this stock pays monthly, and it is really appealing to retirees and dividend investors and people who want to generate income. It's actually a pretty sizable income and a stable company. The price has been going up, but like always with dividend stocks, you are possibly going to underperform the S&P 500 on overall return. Over the past 5 years, it's up about 90%. Well, it's been in a good uptrend. But anyways, I have already equity in my position, and I am profiting about I'm carrying it at 59. I'm profiting just over $5 a share on my main position. Let's see here if they say what they do. Main Street Capital Corporation. It's a business development company and a small business investment company specializing in direct and direct investments. Nobody really knows what they got. I think they got a little bit of real estate, a little bit of notes, loans. But I've had pretty good luck. Founded 2007, employs 104. Regardless, I want to protect my downside, writing a cover call against it. Hopefully, I'm gonna collect the premium, I'm going to keep the shares, and I'm going to collect the dividend. Again, this company pays monthly dividend, and usually they pay around payout date is usually about the 13th of the month. Ex-dividend date is about the 6th of each month. If I go under the dividend history tab, you see here the history. Sometimes they double up. They have a special dividend, like here in September 2023, March 2024, June 2024. It appears like they double up. January, they pay one dividend, December 2025 and the 7th, again December 21st 2025, and January 7th 2026. So I'm pretty happy with my position, but to be honest with you, I don't really care about the stock price. I'm only in for the income. This is my primary dividend income portfolio. As you guys know, I have several accounts, several brokerage accounts, and this one is basically what fuels all my other accounts. So I already have 200 shares in Maine, which 100 of them are already tied up in another cover call with expiration March 20, 2026. And this 6440 call. Okay. Now what I'm gonna do today is selling a cover call which is in the money, not deep in the money, but right at the money. In fact, 59.80. Let's go look at the option chain on this one position. Under the option tab. Okay, notice something. This strike price 59.70 is right about the price that I am carrying those shares. So I believe that makes a lot of sense to sell a cover call right at the money. There is quite a bit of open interest, 275.18 volume, and I'm gonna write it out to February 20th. Now again, this company, in order to collect the dividend here, let's say that they pay February 6th ex-dividend, you gotta own it by February 5th. So hopefully I'm going to keep the shares. I don't mind losing the upside, but and collect the dividend. Okay, let me go ahead and do that. I'm gonna trade. So once again, even if the shares are gonna be called away from me, I don't lose anything, because what I have in unrealized gain, I'm gonna profit it right here today, and more, because I'm carrying it right at this price. Even if I sell those shares at the very price that I bought them, and in the meantime profiting about $500 off of it, I'll go for it, because if the stock price shoots up, I don't care about losing appreciation, because I'm only in for the dividend anyways. If the stock price shoots up, those shares are going to be called away, but I'm going to collect the premium. You are going to collect the premium regardless, okay? In the other scenario that the stock price is going to plummet, well, then I'm going to keep the shares, and I'm going to keep the premium, and I'm going to keep the dividend. That would be the perfect scenario. But anyways, I'm okay doing this. Again, I'm doing this for income, whether it is dividend income or it is premium from cover calls. It makes sense in my particular situation. Okay, so I'm looking at 59.70 call, expiration day February 20th, 2026. Let me go ahead and see what options. Okay, we're right here. What does it say here? Days to expiration, 29 days. I'm okay with this. I'm gonna keep my shares tied up 29 days. Very feasible. And I'm gonna sell the option. Okay, a call, sell to open, one contract, 100 share, strike price $59.70. I'm gonna put this market. Now notice something, there is quite a bit of spread between the bid and the ask. Last price was $465. Let's see how much are going to sell the option. Estimated 429, with 48 cents. They charge you 50 cents a commission. Let me go ahead and do that. Okay, basically the order was placed. It says 429 the proceeds. Of course, now this one might actually change the price because of what I was saying about the difference between the bid and the ask. I already got the notification on my phone, and in the reality it's sold at 443. I don't know if you guys are gonna be able to read that. The very first notification from E-Trade, 443. So basically that translates in 443 bucks deposited on my account today. Of course, we're gonna wait and see what happens. A lot of things can happen between now and February 20th, but I do believe that it was the right thing to do for me. Well, I hope this video was helpful. Anything, feel free to reach out, and happy trading, everyone.